Let's bring in JPMorgan's Jason Hunter. Welcome back. It's good to see you.
Oh, thank you very much. Great to be back.
So let's start with how the rally looks to you overall. As we're about to close the quarter, we're on like a 5-month winning streak for stocks. So how do we look?
Yeah, so it started out as a very thin rally, and mostly the big mega cap tech names that led the way. Those have paused for the better part of the last couple of weeks. And what's taken the leadership in a way has been the deep cyclicals, so industrials, materials, energy, and financials. And that coincided with a sharp lift in commodity prices, industrial metals, and the energy sector as well. Like we put in our note that we just published this morning, that seems suspicious in terms of the timing. If you look at the shape of the Treasury curve, we're able to do analysis and comparative analysis of the U.S. manufacturing cycle, going back to the early 1960s and the shape of the, let's say, 3-month, 5-year curve. And with that curve more than 100 basis points inverted, history suggests it's going to be very hard for a manufacturing cycle, or a substantial one anyway, to play out from here, which is really what those deep cyclicals need to continue to rally from here. So, like I said, the broadening of the rally from a pure technical perspective, if you're looking at market breadth, that's what the bulls want to see, but we're not quite sure, we believe what's going on here with the rotation.
I mean, those who've tried to make calls based on history have had their calls run over by a herd of bulls. Throughout this whole period, it feels like. Well, history suggests when the Fed does this, the economy does that. History says when you have one big group leading for some time, it's unsustainable, the market rolls over. None of it's happened.
Yeah, I mean, you could put us in that camp as well. When you think about the long and variable lags of an inverted yield curve and the transmission mechanism to when that finally starts to get priced into equities and equities start to think about risks going forward for the broader economy. We ourselves in the technical group here at JPMorgan thought that would have happened sooner. And the reality is, ever since the S&P pushed above the 4,400 level, we've been skeptical, and here we are, poking at the 5,200 and above area. It's the long and variable lag period. The economy has a little bit of hang time here over the last few quarters, and we've paid the price for that when doing the comparative analysis. But again, if you look at even in the post-1980 world, when the lags were longer and far more variable than what you saw in the pre-1980 cycles, 22 months after the 3-month, 5-year curve inverts, that's typically on average when you've seen the data finally start to inflect lower in the economic data. That would put us roughly in August of this year, and markets in theory should lead that by 1 to 2 quarters. So can it stretch longer than that? Sure. That's what we basically have done is say, look, the momentum's strong. Stop trying to fight the trend, go to a neutral stance. And right now we've kind of have this 2-pronged approach. If the leadership, the heavy momentum names start to break down, and coincidentally, the 50-day moving average sits at those pattern support levels, so it's a nice, easy number to look at for something like the Nasdaq, the S&P 500, or the Philadelphia Semiconductor Index. If those break to the downside, you follow that and you go short and put a tight stop. And on the flip side, if something like the Russell is going to start to break out, small caps are usually the last to go in a PMI cycle or in a manufacturing cycle. There's a lot of catch up there. While we're skeptical of that, we would just follow suit, and let's say if the Russell breaks above 2150, you start stopping into exposure on the long side and put a stop under that. Again, that's our risk scenario. Mm-hmm. We find it hard to believe that unfolds, but as a technician, if it starts to break out, go long and try to stop underneath it and see what happens.